Every single year, millions of Americans over the age of 65 hand a check to their county for a bill they may not legally owe a penny of. They paid off their mortgage decades ago, they own the home outright, and the county still sends a property tax bill every year for thousands of dollars on a house that is already theirs. Here is the part that should make your blood boil. There are at least 5 legal forms sitting on a shelf at your county tax office right now that can lower, freeze, or in some cases completely wipe out that bill. 5 forms, and your county will never tell you they exist. They will not call you on your 65th birthday. They will not mail you the application. Because every dollar they let you keep is a dollar their office does not get to spend next year. The average property tax bill in this country is around $4,400 a year. For a 65-year-old who stays in their home another 20 years, that is nearly $90,000 and more as the bill climbs every year, walking out the door on a bill that for many of you should be a fraction of what you are paying, or in some cases, zero. I will walk you through all 5 forms in plain English and exactly how to claim each one. But stay with me to the end, because the very last form is the one that quietly costs people the most money, and it is one of the easiest of all to file. And there is one mistake people make with these forms that can actually get your house taken, so I need you to hear the warning before you do anything. All right, here is what they are not telling you. Now, right now, some of you are about to click away because you think this is not for you. I need you to stop, because that is exactly the mistake that costs people the most. Let me guess which one you are. Maybe you are thinking, my house is paid off, the tax does not really hurt. It does. It is the biggest recurring bill you will ever pay on a home you already own, and the county does not care that the mortgage is gone. They send it anyway. Maybe you are thinking, I am comfortable. These programs are for low-income people. Not true. In a lot of states, the biggest senior break is based on your age, not your income. Texas, for one, gives every homeowner over 65 a large exemption and a tax freeze with no income test at all, no matter how comfortable you are. Some states do add an income limit, so you have to check, but plenty of people who think they earn too much actually qualify. Maybe you are thinking, I am barely getting by on Social Security. The big exemptions are for wealthy people with estates. Also, wrong. Some of these forms exist specifically for the house-rich, cash-poor retiree. And maybe you are renting, thinking none of this touches you. It does, because your landlord pays that tax and passes every dollar of it straight to you in your rent. So this is for every single one of you. On every form, I will tell you exactly who it helps the most. Nobody gets to click away saying this is not for them. Form number 1 is the homestead exemption, and this is what gets people. It is the form most homeowners assume they already have on file when they do not. Almost every state offers some version of a homestead exemption on your primary home. It takes a chunk of your home's value off the books before the county calculates your tax. In Florida, the basic exemption is $25,000, with up to $25,000 more on the part of your bill that is not school tax. In Texas, it is $140,000 on the school portion, and even more once you turn 65. Every state different, but every state real money. But watch out. In a few states, it is applied automatically when you buy. In most states, it is not. You file a 1-page form with the county, often before a spring deadline. Miss it, and you pay the full bill that year. File it once, and in many states it stays on file as long as you own the home. This one helps everyone, and it matters beyond the savings. The county will not let you claim the senior exemption, the freeze, or the deferral unless your homestead is already on file. It is the gate to everything else. So call your county tomorrow and ask one question. Is the homestead exemption on file in my name? If not, ask which form adds it. If this is already useful, do 2 quick things for me. Hit subscribe and tap the bell, because these rules change every year and nobody from the government is going to tell you what it means for you. That was the warm-up. The next 4 are bigger, and form number 3 is the one that can freeze your bill for life. Form number 2 is the senior exemption, the age 65 exemption, and it sits right on top of the homestead. This is the one the county will almost never mail you. It is a separate piece of paper, and you have to ask for it by name. The amount varies a lot. In Texas, Every homeowner 65 and older gets an extra $60,000 off the school portion on top of the homestead. So a qualifying senior can have $200,000 of school value wiped out with no income test at all. In Florida, there is an extra senior exemption worth up to $50,000 more, though that one has an income limit. In New York, it can knock up to half off the assessed value for those who qualify. Now, I have to be honest with you because a lot of these videos are not. In some states, like Texas and Mississippi, the senior exemption is based purely on your age, with no income test. In others, like Florida, Georgia, and New York, there is an income limit. Or it is a reduction instead of a full wipeout. So do not assume you earn too much to qualify, and do not assume you automatically do either. Call your county and ask 3 things. What is the senior exemption here? What are the rules? And when is the deadline? Form number 3 is the senior assessment freeze, and this is by far the most valuable form on this entire list. When you turn 65 and file the freeze, depending on your state, the county locks in either your home's taxable value or the actual dollar amount of your tax at the level it was the year you applied. In states like Arizona and Illinois, they freeze the value your tax is based on. In states like Texas, they freeze the school tax dollars themselves. Either way, as your home keeps climbing in value, you stop paying tax on that climb. Your home can double. The number they tax you on does not. Here is who this hurts. Say your home was worth $220,000 when you turned 65, and it is worth $440,000 now. If you never filed the freeze, you are paying tax on every dollar of that appreciation, and you will keep paying it for the rest of your life. The neighbor across the street who filed the form is paying on the 220 number. Same house, same street, 2 completely different bills. The only difference is one form. In the value freeze states, your bill can still tick up a little if local rates rise, but you are no longer taxed on your home's appreciation, and that is where the real money is. There is one rule. You have to file within a set window, often the year you turn 65 or the year after. Miss it, and in some states you lose that year's savings. But in many states, like Texas, you can file late, up to 2 years back, and even get a refund for what you overpaid. So even if you turned 65 a year or 2 ago, call now and ask for the senior tax ceiling or assessment freeze by name. Every year you wait is a year of overpayment you never get back. That is the form most people never hear about. The next one is even quieter, and it sends you a check. Form number 4 is called the circuit breaker, and most people have never heard the term in their life. The idea is this: when your property tax climbs past a certain percentage of your income, a breaker flips, and the state credits part of it back to you. It works like this. You file with the state, often right on your state income tax return, even if you owe no state income tax at all. If the property tax you paid is more than a set percentage of your income, the state cuts you a check or a credit. Massachusetts, Maine, Vermont, Michigan, Minnesota, Missouri, Maryland, and Wisconsin all have a version, and more besides. And here is the key part the county will never mention. This refund comes from the state, not the county, which is exactly why your county has no reason to tell you about it. And the income limits are not low. In some states, they run past $100,000, so this is a working middle-income retiree program, not just one for the poor. Search the word circuit breaker property tax credit and your state's name, and file the form. Form number 5 is the property tax deferral, and counties treat it like a state secret. If you are over a certain age and meet the residency rule, you can file to defer your property tax, not lower it. Stop paying it. The unpaid amount becomes a claim against your home, repaid only when you sell, refinance, or the home passes to your heirs. For the homeowner who is house rich and cash poor, the exact profile of millions of seniors, this is life-changing. You can stay in the home you raised your kids in without writing the county a check. But now the warning I promised, and this is the most important sentence in this whole video. A deferral is a form you file. It is not you just deciding to stop paying. If you simply stop paying your property tax without filing anything, the county can put your home up for tax sale, and you can lose it. People lose their houses this way every year. So you never ever just stop. And here is the honest part the other videos skip. This is not free money. Interest builds up on what you defer, usually somewhere around 3 to 6% a year depending on your state, and the deferral puts a lien on your home. That is not a scam. It is just the deal. The state gets paid back with that interest, out of the house eventually, for a paid-off home that is fairly clean and simple. If you still have a mortgage, check with your lender first, because some mortgage agreements treat unpaid property tax as a default. File it right, and the bill goes away while you stay in your home. That is form number 5, and for the right person, it is worth more than the other 4 combined. These 3 bonus moves can be worth a fortune. First, if you served in the military, the disabled veteran exemption is in almost every state. In many states, a full 100% service-connected rating wipes out your property tax completely. A partial rating still gets you a partial break that varies by state. 1 page, plus your VA letter. Second, the surviving spouse trap. When a senior passes, their exemptions and their frees do not automatically transfer to the surviving spouse. They have to be reapplied for. In many states, a spouse who is 55 or older can keep the senior exemption and the tax freeze, but only if they file. Most counties quietly let it lapse, and the bill jumps by thousands on the household that just lost half its income. Third, protest your assessment. The county's value of your home is set by an assessor who has never been inside it. They are wrong all the time. Every county has a protest process, usually a short form, and in many cases the value comes down, lowering your bill that year and every year after. Fewer than 5% of homeowners ever protest, even though, by some estimates, about half of those who do win a reduction. Protest every year, especially the year you turn 65. So let me say the thing the county never will. The seniors who pay a full bill year after year are not careless or unlucky. They are simply the ones nobody handed the form to. Being legally entitled to a lower bill and actually paying one are 2 different things. The law does not refund you automatically. Nobody mails you a check. You have to know the form exists, and you have to file it. So here is your checklist. Call your county assessor and confirm your homestead is on file. Ask for the senior exemption by name. Ask for the assessment freeze by name, and file it even if you are already past 65. Search the circuit breaker credit for your state. And if you are house rich and cash poor, ask about the deferral. But file it, and never just stop paying. Then protest your assessment this year. If this helped you, do one thing for me. Send it to one homeowner over 65 you care about. The county will never tell them any of this. You might be the only one who does, and that one share could save them $4,400 next year on a form they never knew existed. And property tax is not the only bill you may be overpaying after 65. I made a whole video on the taxes you can legally stop paying once you cross that age, the ones nobody tells you about, and it is right there on the screen. Watch that one next. Take care of yourselves, and take care of what you worked so hard to build. I will see you in the next one.